Okay, let's talk about the daily bias. And I guess we'll also talk about taking the trade and where to put stop loss. That's been requested. So to do daily bias, and I just want to preface with some days you're not going to get a daily bias. It'll be too choppy. There won't be fair value gaps to use. It's just going to be too difficult. Recently, we've had a number of those days. It just happens. We can't control the market. You get random stuff happening. So just know that not every day you can get a daily bias. And sometimes your daily bias can just be wrong. But what I do at first, I take a little glance at the daily chart. You don't have to use the daily chart for your daily bias, but I do take a little peek. We didn't have this candle or part of it printed from 6 p.m. yesterday, but we had all of yesterday, Wednesday's candle, and it completely filled a bearish gap, as did pretty much the yesterday's Wednesday candle, daily candle on ES. So I can't say that we're bullish because we didn't close over that, but I can't quite say that we're bearish. But the wick here is what tells the story. That tells you that the bulls lost the battle. Price came all the way back down after sweeping internal resting liquidity, IRL, buy side. So we're definitely more bearish than bullish. If we go to the 4-hour chart, we had up till here, we didn't have those other candles. We didn't have the 6 a.m. or 10 a.m. quite yet. Um, and so here, again, I can see that we went up into the 50% range of the 4-hour bearish gap of yesterday's range. This was yesterday's price range. We crept up on both index into premium buy side of the daily range of yesterday, or sorry, of a couple days ago. And so that with the wick would tell you that we're a little bit bearish. I go down to the 15-minute and 1 hour. So the 1 hour was going to show you up until here that yesterday's high we didn't come near. Probably somewhere in here we had a bearish gap on the 1 hour. Maybe we have it on the 15-minute. You can see that as well. We crept up into this gap with wicks as well. And no bearish SMT here, but you can see how there was huge displacement to sell side. We just crashed through Asia low, took out yesterday afternoon's low on both pre-market. And so that can kind of give you the pre-market bias of bearish. We also had the 8:30 a.m. news candle. News candles, news wicks, data wicks can give you some help on where price will want to draw to intermittently. So at least until that 8:30 candle, where is it right here, was tapped, um, we were bearish. We had to come down, created this bearish gap, sorry, this bearish data wick, came up, and then we smacked back down to take it, and that's what created our bullish SMT, where ES took this low, NQ could not, and we ended up popping up quite a bit, but that was the SMT causing the pop there. We were, as you can see, overall still bearish. These wicks, very wicky, hitting up into premium and inside these bearish gaps. I'm sure if we go down to the 10, we'll see, not quite, the 5, you'll see some bearish gaps. But again, we really only use the hour and 15. So you can see how we came at that time up into the bearish gap. We still never closed over, so we're not quite bullish. You can't, confidently say that we're bullish, but we definitely showed wicks signs that the bears were now coming back into play. We're taking control of the market, and that price was going to come down. So very wicky, very, very barcode, choppy mess today as far as price action. But you can see how we still came down. We have another bullish SMT that yesterday AM low, not yesterday's low, previous day low, but the yesterday AM low still has yet to be taken on NQ. So that kind of gives you a little sense of daily bias. Again, it can be wrong, but mostly you want to look at the 1 hour and the 15. You can use the daily if there's some fair value gaps and anything that shows you like a close under. For instance, in the past, this close under on this swing high was a pretty big giveaway that we were going to come down. We still retraced, but overall price action was bearish for several days. So you want to look for those daily gaps, which again we respected here. We completely delivered out of this bearish gap as part of your daily bias. but I think the 1 hour and the 15 are most important for creating that daily bias. So again, when you come to, you know, 8 a.m. whenever you're ready to take your trades, you're just going to bring up the daily if you want to start looking at it, then the hourly, then the 15. They should all complement each other. If there's discrepancies there, then you really want to wait till things kind of formulate and give you a clear sign. So for instance, today it wasn't very clear. We know that price chopped around like hell. But overall, and even my draw on liquidity from yesterday was bearish that we were going to come through and probably take this low, which again was only taken on ES, but we're awfully close to taking it now on NQ. So zipping back down to the 15-minute, you can easily see Asia London sessions, the overnight range that we couldn't take out at all previous day high. So this is just kind of trending to lower lows mostly after taking out a significant amount of buy side, which was yesterday's high, because we did pop up quite a bit, get inside of consequent encroachment, the 50% of last Thursday, a week ago's dump. So we still look to be high time frame bearish. Hope that helps with daily bias. As far as stop loss goes, let's look at the 30-second short today to the data low. So that was here. Where was it? No, I'm sorry, it was right off open. So the 830 low was right here. Nice wick on both. Didn't have any buy side sweep, but we had the 830 sell side wick. Yes, this was a valid trade because here we have a little bit of a bearish SMT where NQ took out all of this buy side. However, on the 30-second, it did it on the market open. We had all these wicks to show that the bulls could not win. They just kept getting denied, denied, denied. And then at the point of this close under, you could have entered a short position, again, targeting the 830 low. You could have held a little bit further, but there's no telling where to take profits fully past the 830 low, unless you're married to sell side, but we went away from it. So you would have, again, entered this 30-second short. You have a swing high, a lot of wicks showing the bulls getting denied, denied, denied. And then your stop loss after entering at about 845, you would have put your stop loss around one of these highs up here. They say do the close above. That would have stopped you out. I like to give myself a little bit more breathing room, especially if something's like market open like this, where things are really volatile, where price is just going to be bouncing around, bouncing around. So you would have gotten in at about 845. You would have set stop loss maybe to this high here at 870. So 25 point stop. Or up here at 875, which would have been I'm sorry, a 30-point stop. This would have been a 25-point stop. So really not bad at all, especially if you're taking this internal high here. You would not have been stopped out. This wick would have been the last one to go, and then we would have just displaced with this candle closing with no wick, well below these wicks. Well below these wicks. A candle like that is showing a lot of momentum to sell side because there's no wick here. There's no pullback. It completely closed at the end. It did not pull back at all in the time frame of that 30-second candle. And then we just kept going from up here 845, TPing at 830, low at 798. So you would have gotten about 47 points profit. For some people who take pretty good size, 5 plus 10 micros, that's your day. Your day is done. You've made a shit ton of money. So that's basically what we look for. Again, if you were to take this 30-second short and enter right here, I would have said, put that stop at least here, the close above, or even this high here. And as you can see, it's not taken. You would have went break even because we took the low here, and then you would have been stopped at break even. So that is that break even, moving stop to break even at the next, low or liquidity pool, whatever, is just meant to save capital. You'll probably hit break even more times than you want, but it's going to save you more times than it would have succeeded in your direction. Because if price is going to pull back that much, it's probably going to go back and hit your original stop loss too. So why take losses when you could just break even on the trade? That's what I always say. So, and when you get to a live account, your break even will have to be a few points into profit because of slippage, just because you're dealing with the real market, not the simulation that gets filled instantly. It takes just a second. There's a little bit of slippage, especially if price is really moving. So again, on this 30-second short, you would have entered right here on the close under, and then stop loss right here. If you wanted up here, you would have stayed into the trade, and it would have actually stopped you out break even over here after taking out another low. It's your preference where you want stop to move to break even, when you want to move stop to break even. But the stop loss, again, at least the close above the body, or usually a wick to swing high. It's up to you how much breathing room you want to give. Typically, when it's a successful trade, in this case a successful short, there's almost no drawdown. So where you enter, the price almost doesn't come back for quite a while until you enter that next liquidity pool. In this case, getting and filling this gap with this wick here would have been my break even, so I would have been stop break even here. Some people let it go until this body is taken with this wick over here. So either way, break even trade, but always move stop to the close above, close below from your entry. Hope that helps.